the competitor is only a threat if the customer looks that direction. And if you give the customer no reason at all to look that direction, then in essence, the competitor doesn't matter, no matter how loud they're yelling.
Welcome to The Art of Quality, the podcast seeking wisdom in business, investing, systems, and the art of paying attention. Each episode uncovers stories from practitioners who have spent years pursuing multi-generational excellence in their craft. We are seeking to understand how the world really works and how we can align our actions to it. I am your host, John Candito, and this is our series on the art of quality in investing.
John Candito is the founder and managing partner of the Phronesis Fund, the lead sponsor of this series. This podcast is for informational purposes only and is not investment advice. The podcast host, guests, and clients of the Phronesis Fund may maintain positions in securities that are discussed.
Our guest today is Drex Davis. Drex is the former CEO and current Chief Financial Officer of Scrapbook.com, the leading e-commerce provider to papercrafting enthusiasts. Drex is also the investment manager for his family's single-family office that invests widely across asset classes. In this episode, we discuss The Art of Work, which is a book that no one can buy, many ways to zig when others zag, how being a business manager makes one a better investor, and how being an investor makes one a better business manager. This was a fun one, full of wisdom. Please enjoy our conversation with Drex Davis. All right, I've been looking forward to this one. We have my friend Drex Davis, who is going to drop some wisdom on us. He is, as I mentioned in the intro, a classic case of someone who is a wonderful investor, partly because they're a business manager, and a wonderful business manager, partly because they're an investor. I have a great place to start, but just before I go there, Drex, welcome to The Art of Quality.
Thanks, John. It's great to be here. As a longtime listener, it's a little bit surreal to be on this side of things.
I'm excited for our conversation today. There's far more we could get into than we'll have time for, and that's a great problem to have. But somewhere I'd like to start, Drex, you're the only person I know right now, at least, who wrote a book that no one can buy. So you wrote a book called The Art of Work, which is, I think, a title that's compelling, certainly a title that makes me want to read it, and you've very kindly allowed me to have a copy for my eyes only. But maybe a good place to start is why did you write a book that no one can buy?
Well, it's a good question, John. The book itself was an organic process where I realized the book was almost entirely written before I realized it was a book. So I am currently the Chief Financial Officer of Scrapbook.com. And for nearly a quarter of a century, I was the Chief Executive Officer of this same company. And there were memos over the years that I had written to the organization that weren't about a particularly pressing problem in the market or even an opportunity. It was just the way I hoped people would think about the problems they were solving, the frameworks I wanted them to have as they perform their work. In essence, I wanted people to think like owners. And, as an owner and as a CEO here, this is how I thought. And so I tried to write these memos in a way that they would be short and digestible, and also in a language that anyone could understand and absorb. And so, over, let's call it 15 to 20 years, these things just sort of stacked up, and they were in emails, they were in Google Docs, they were in Word files. And I found myself increasingly having to search very far afield to find something I had written before and share it with a new colleague. And so what gradually took shape was, hey, I think there's actually an order in all of this. I think over time I've said what needs to be said, or just about everything timeless that needs to be said in our organization to think like an owner, and to have a set of frameworks, tools, principles, patterns that you could apply to any situation you're in to make a good decision. a good long-term decision. So I spent a couple of years just bringing all of these back together, in some cases updating and rewriting, segmenting, and tried to find like what is the overarching principle in each memo or in each teaching. And so each section received a title. I'll give an example. The first section is called The Central Truth. And I guess the first subsection is called We Don't Win Alone. The next section is called A Stakeholder is Anyone Who Suffers When We Fail. A business is a living thing, not a machine. And then I explain what that means. So each of these are about a page or two long, not large pages, not 8.5 by 11 pages, but small book size pages. People can see the size of the book here. And then at the end of every section, there's a set of questions for the reader to ponder. The way that the book started to be utilized internally is every week we have small teams that meet. And in those weekly meetings, the team will read a section together and then ask the questions and answer them as a group. And we just cycle through the book. We're on our second read through now. And it's been really gratifying to sort of hear the language that you've employed in the book start to permeate the organization. A lot of that language was already there because it's things that we've said over and over and over, but you realize people are absorbing it. So the reason it's a book no one can read or a very small audience can read is, firstly, it does contain what we believe are trade secrets for how we do work. But although I think the greatest advantage that the book confers is that it is, are you familiar with the book A Pattern Language by Christopher Alexander, the architect?
No, that's a new title for me.
So A Pattern Language is a book where Christopher Alexander took every architectural component that could be used to build a city, town, neighborhood, structure, home, room, component of a room. And he wrote the book in such a way that you could take any two components and combine them, and it would allow these structures to work together. A lot of software engineers found the book compelling because it sort of was a modular approach to an architecture. And as I understand it, various writers of languages were using this object-oriented principle in this book to inform their languages. So I thought, how could we write the linguistic code of our organization in such a way that it could be used much as a pattern language was used? So you could open the book anywhere, identify a principle, open the book to anywhere else, identify a principle, and in some way, shape, or form, you could find some useful overlap. So that is the reason. The title, The Art of Work, is just an outgrowth of the nature of our business. We support and sell and encourage artists. Paper crafters are artists, I think, of the highest quality. They're a special kind of artist. And a lot of the colleagues who are attracted to our organization were first attracted to what we do. We have a lot of customers and who work for and with us. And I've noticed that their approach to their work is very much one of an artist as well. The title is an evolution, the nature of the customer we support, but also the nature of the people who work here. They are artists, and their work is an art form. And I'll, to maybe complete this run-on sentence and not tangent too far, we've had many people come to tour our warehouse and want to see our operations, and we don't allow any photography. We actually feel that our own warehouse and the way we operate things is a competitive advantage. But people have walked away saying that first of all, it's the cleanest warehouse I've ever seen. It's the most orderly warehouse I've ever seen, and it's the most beautiful warehouse I've ever seen. And so I feel that the book in its title sort of encompasses the ethos of the colleague we've attracted at the company.
I love that. That's great. I would, in language I use often, in some ways it's a bat signal for the right kind of person, certainly within the organization. I love that. I mean, I was thinking about software libraries as you were mentioning pattern language, and that makes so much sense. There's a lot of ways we could go with this, but I think one that I'm drawn to is in the book, you share a story of a competitor who actually had investigators going through your trash. And one of the lines that sticks out to me is you said, I might be paraphrasing a little bit here, but that competitor could try to copy our actions, but they can't copy our thoughts. And so can you say more, just what is, in some sense, I get the impression that you're, maybe you shred a little more paper than you used to, but broadly the secret sauce wasn't reading the paper exhaust that comes out of the business. It was actually in knowing how to think and how the business thinks and how the organism works. So can you say more about that experience?
Yeah. I used to be a lot more paranoid about our competition. Well, one reason you get a little paranoid is when you find out one of them has hired private investigators to dig through your trash.
Sure,
but
I bet.
I'm more worried about potentially sensitive information about a customer or a colleague ending up in the trash and being seen, as opposed to maybe a draft of the art of work. So it's really because anything observable from the outside is just that. It's an observation. I'll betray some of my philosophical background. You got the Kantian Ding an sich, the thing in itself, the phenomena, right? What you're observing isn't entirely the thing itself. You're observing the phenomenal layer. And what happens inside an organization is mostly invisible. It's relational. It's not only the relation between the knowledge in everybody's head and the synapses, but it's the dialogues they've evolved between themselves. It's their shared pools of meaning. These are accumulated over time, and by and large, I would say we are often even unaware of what those are unless we're very intentional and explicit about trying to surface that. And so these layers of understanding, of know-how, that's just what we call a culture, right? Culture is really hard to create in an intentional way and do the right way, and it's darn near impossible to mimic. And if you come to the conclusion, as we did, that our competitive advantage is our culture and our strategy is our culture, then you start worrying a lot less about your competitors and their ability to copy. So in fact, I would say we spend all of our time looking at, talking to, and thinking about our customer. That's really what matters, because the competitor is only a threat if the customer looks that direction. And if you give the customer no reason at all to look that direction, then in essence, the competitor doesn't matter, no matter how loud they're yelling. I don't know about you, but once I find a product that I think is very, very high quality, I don't look elsewhere.
You're not looking for substitutes. Yeah.
No, until
it fails to be the highest quality. Yeah.
That's right. Yeah. So our idea is just be that high quality. So to come back to your question, you can copy the actions, you can't copy the thoughts. We've had a handful of competitors copy things that we did on the website, but they didn't understand why we were doing them. In some cases, they were part of a broader strategy that linked in to a future development or released, and they didn't build theirs the correct way to capitalize on that. But worse, in some cases for them, they were copying things that we had already concluded were broken, didn't work, and were trying to figure out how to decrement and retire. And so you just, you get into trouble in many, many ways when you try and copy. There's a difference between learning from another person and mimicking another person. Learning from another person really goes to the depths of, why are they doing what they're doing, not what they're doing, because why they're doing what they're doing might yield an entirely different behavior from me when I understand that, because I'll understand, oh gosh, they've got a certain competitive capability that allows that behavior to be right for them. Maybe the lesson I need to learn is develop a competitive capability and then act consistently with it.
And actually, you're getting into one of my favorite. It's a chapter title, but also just a discussion within the book. It starts with a business is a living thing, not a machine. And I think you're poking at that in a lot of ways. I mean, certainly it's a lot easier to copy a machine, look at a bicycle and make one versus, kind of look at a living thing and copy that. And not only copy that, then if it's a living thing, you have to copy its evolution. And by nature, you will be behind because you're only copying what's already happened, not what is happening or what can happen. So can you say a little more about how you look at your business as a living thing, not a machine?
Sure. Yeah, I think what'll be helpful as a point of departure is just a paragraph from this section in The Art of Work. It says, a business is a living entity made up of living beings. Over time, it exhibits variation and grows fruit. Sustaining a machine requires oiling and swapping out parts as needed, but those parts never change or grow. But living things change and grow. To sustain a tree, we must nurture, water, and care for it, understanding that when we do these things, the branches will grow and bear more and more fruit. If we're building a business to last, we must care for it as we'd care for a tree, by cultivating the individual beings that comprise it and ensuring they bear fruit. So what scrapbook.com has been an evolution because the people that comprise it have evolved, and people have left who were irreplaceable and people have joined who will become irreplaceable. And so I think it's a mistake to try and fit people into a particular mold. I feel like, you hire them into a role, there's a certain work that needs to get done, and then you've got to sort of allow them to become the best version of themselves. That's a phrase we use a lot around here, is being the best versions of ourselves. So there's any number of versions that a person could become, but they'll often surprise you. And then you need to let your organization evolve in the ways in which the people within it evolve, because they are evolving competitive advantages as individuals. And it is only those advantages as individuals that become the advantages of the company. So I'll just give a small handful of examples. Hopefully, I've got a lot of them. But the president of our company was hired as a graphic designer. And if we were thinking in terms of a machine, today she would probably be a graphic designer, because we would not have wanted her to be a part any different than what she was. But what happened early on was, her natural gifts as a graphic designer, she wanted to understand more deeply the customer she was designing for. And so that led to variation of design that was becoming more fitted to the customer. And then that led to some deep understanding about messaging and a deep study about messaging. And so that led to more and more what we would call like traditional marketing roles. And then as the customer began to be understood, from a psychological standpoint, then she took up the craft of what we were doing and understood very, very deeply from the inside of the mind of the customer what product they liked. And so this, she started representing us at trade shows in certain capacities, started producing content. We had, video content. She became a co-host of a podcast that we did. Interestingly enough, the other co-host was someone hired as our HR manager, who's now our director of people and culture. And eventually, fast forward to today, she's the president of the company. And when my brother and I, who run the company, are out, she knows exactly how we think, exactly how we would want things done, but also can bring her own flavor to it and be her own person. So that's one example. I mean, there's, many others I could point to where you're just letting the people grow. And, would we have done a podcast if this individual was not here and evolving in the way she was? I don't know. Maybe not. We've got all kinds of things that we do internally to develop people. We could go kind of further down that rabbit hole, but the point being is that I think you're gonna, like the papercrafting, right? You're gonna, if you have this vision of that your business is this machine and it has to look this certain way and the people have to operate or function a certain way, you're going to constantly be chopping off the best parts of them and the best part of your evolution. So it's much more exciting and interesting to say, what does this group of people do? I like to watch sports because I like to watch the strategy that evolves, not just game to game or quarter to quarter or possession to possession, but season to season to season. And you find that the best, let's take basketball, the best general managers and coaches, they start with the talent they have and they find the heart of the team and they build around it. And then what naturally happens is, as those individuals who they've brought in to support that core talent become their own sort of special, they sort of move. The worst coaches bring their offense in and then fit the team to it. The best coaches say, what's my talent? And then how do I get the most out of it? So I just think that's the right way to to approach a business as well.
Yeah, absolutely. There's interesting research. I think, I've probably discussed it in the past. Ken Stanley comes to mind, his book, Why Greatness Cannot Be Planned. And a central point to that is his research suggests, and others do as well, that if you look back in history, the precursor to phenomenal inventions, so for example, the electronic transistor is a precursor to the modern computer, or, the combination of technologies and innovations that ultimately led to things like nuclear power. Those things were never invented with the end goal they ended up being used for in mind. Mm-hmm. And so, it just doesn't seem to be the way the world works that, we kind of say, hey, maybe we could create this thing called nuclear power. Let's go try. It's more that we just are creating things and then we're seeing how things evolve as we create things. And it's funny in a way when you look at the world and you say, okay, so there's the evidence that, when we get surprised by we accidentally created penicillin, it's a wonderful breakthrough for humanity. And yet then we turn around and try to, often try to shape an organization as though we can plan it into greatness. And just not how things work.
I love that. So there was, I can't remember who said it, but it was, about a decade ago, somebody said the next big thing will look like a toy. And, you kind of take that a step further. It will look like a toy. It might be a toy, right? Gosh, who said that? I could probably look it up. I think maybe it was Chris Dixon.
Okay, that sounds.
Does that sound right?
It does, yeah.
So, just taking that approach, right? The next big thing is probably in front of you in another state you don't recognize, right?
Right. Yes.
Yeah.
Yes. And then you can see, I love the way you told that story with people. If you think through the alternate versions of your business's history, what is the business if you hadn't had the wisdom and wherewithal to say, maybe graphic designers can be things other than only graphic designers? Mm-hmm. And I'm sure, you have many such stories like that. Well, go ahead.
Well, I was going to say, I think you're hitting on something here, though. Sometimes genius is actually realizing at the last second the thing that's staring you in the face. And I wouldn't call us geniuses in any way, but we had a moment where people in our industry called us geniuses, and it was nothing of the sort. Essentially, on the website, we have a gallery where paper crafters, artists can share their work. And I think there's something like 3 million projects in this gallery. This is user-generated content. And when we were building the newest version of the gallery, one complaint that we had heard from users was, you need to make it easier for us to list the products we've used in the layouts, because that's a question. It's a very helpful thing. I see what you've done. Now, what did you use to do it, and how did you do it? So, responding to that customer request, we built this little lookup database where people could just look up products in our store right from there, and they could click on the product, and they could click on the image where they'd use the product, and then when someone hovered over the image, that product would pop up. Now, this was great for us because it's something the users wanted, but it also provided a direct link to that product in case somebody wanted to buy it.
Right.
The week before this launches, my brother McCain, who is overseeing the development and working closely on it, comes to me and he said, it just occurred to me that if we've linked these two databases already and we've linked the product to the image, that means we've linked the image to the product. Why don't we start adding these images algorithmically to product pages, and we can show the most beloved images that feature this product? And so within 1 week, we just backwarded it into the product page. And when we launched the new gallery, we also launched the new product pages, and the uplift on conversion rates for these individual product pages was fairly significant, because you weren't just looking at a product image, you were looking at what could be done with it right in front of you, and that was inspiring to you. So we released this thing, and we heard from all over the industry, man, you guys are absolute geniuses that you've done this thing. The truth was, there was, we were the last people to see the thing staring us in the face for a year as we developed this thing and built it. And so I think to your point, the insights often come last when you're just working hard on something and not completely aware of the interaction.
Right. Well, I
between,
imagine,
you know.
I'm thinking of that as a business problem, and you have many thousands of products and many thousands of customers and so on. And so if that was the view of that prior to that unlock was probably, it'd be a great idea to connect the products used in this to the output, but that would take hundreds, maybe thousands of people, dozens or maybe hundreds of weeks to do that. That's an insurmountable. And
Right.
then until you found the other way to do it, which is more evidence of this stuff, it emerges.
Yes.
And you have to be open to the emergence.
That's how it was done in the early days. People would actually physically mail their works to us. We would scan them ourselves, put them up on the website, list the products by hand, mail them back their works. I mean, obviously.
Wow.
And so to your point, right, it actually did start very painfully. And it was just, how do we resolve this pain was
right.
Right.
Iteration. I'm going to pivot our conversation, but it's not going to feel like a pivot at all. So we've spent, call it the first few minutes we've been talking about being a business operator, being a business owner, the centrality of customer perspective. But of course, in the opening, we framed this as you're a better investor because you're a businessman, and a better businessman because you're an investor. And so what folks also know about you is you lead a family office as well, and you're a very active investor across multiple asset classes. And I think a link here, and maybe one you could riff on, is, tell us a little bit about what you invest in, or at least the kinds of asset classes you invest in, and then how all this knowledge and learning around building a business and being very obsessed about the customer and serving the customer has linked to an ability to be a very successful investor as well.
Okay, where to start on that? I guess the first thing that makes sense is to also say that this role was a natural evolution as well. We are a family-owned business, and the family members in the business are, span a couple of generations. And so the needs of the ownership was different. So we were in the fortunate position of the business producing more in earnings than needed to be reinvested in the business proper. We wanted to keep our optionality, right, available. So, excess liquidity needed to remain available to the business. And we wanted to be opportunistic as these, opportunities presented themselves. But we also knew that we had, my parents, who are the initial and primary shareholders here, and, we needed to provide them exit solutions. But so what that created was the need to have some set of capital that would maintain its purchasing power over a longer time horizon when they needed it, and other forms of capital that needed to retain their purchasing power over a shorter time horizon. And so I would say it was almost like a liability matching exercise that we went through. What capital needs to be available when, and then what is the right asset class to best preserve the purchasing power? So we started with a framework of capital preservation, right? Return of capital. And by return of capital, we mean return of purchasing power of capital. I mean, if I put $1 in today and you give me $1 in 10 years, I didn't get return of capital. I got return of a lot of capital destruction. So, and when you go through that exercise, not surprisingly to your listeners, you're going to have a lot of different asset classes in your portfolio, but their role is very different. From the outside, it might not make sense, but from the inside, when you realize what you need the capital to do, it makes perfect sense. So we are in some private equity funds. I would say that we're most drawn to secondaries. The reason for that is we're willing to forego upside to minimize downside, and the really good secondaries operators are, what they do is they buy at a discount, right? They've let other operators sort of take a certain amount of risk. They've watched and they're waiting for motivated sellers. I would say that a lot of what we do is trying to position ourselves in a way where at the time we take our position, there's a motivated seller on the other side. Motivated sellers are less price sensitive. And so when you think about that in the private equity world, I actually think, private equity is generally a flawed model because you are putting capital to work on a calendar rather than waiting for a set of conditions. And so I think because this is what I've learned in business, right? In business, you make investments when the conditions are right, not because a date turned over on the calendar and I said I would, buy this much inventory by this date. And so let's just go buy whatever's out there, independent of its quality or whatever. So when we looked at private equity, we were like, who's really finding a motivated seller? Who is disciplined? And so it tends to be these secondary funds that have long time horizons to deploy and then long time horizons to sell. The closer you are to a permanent equity structure, the better. And so the funds we sought out, the funds we found, they tend to be people who have been doing that for a long time and are good at what they do. And some, funds vintages have spectacular returns and some have passable returns, but none have, I guess, gross or ugly returns. And so I've given you one asset class, but
well, yeah, take us through just broadly, so you're across, I know kind of venture all the way through whatever the opposite of venture is. So give us a sense of that. And then I want to double click on what you've learned from the customer angle.
Sure. Well, we like things with motivated sellers. So we're actually in quite a few distressed funds, and distressed there's a lot of good operators, or a handful of good operators in that space. And they never know when their opportunities are going to come along, and they will underperform for long stretches usually. But when we have a point of view that we've developed based on where we sit, because we're a discretionary category, and oftentimes we anticipate recessions that don't materialize, but we've also anticipated very early every recession that has materialized. So we feel that allows us to identify distressed funds at an opportune time. Yeah, so we do venture, we do private equity, distressed credit. We really like that a lot. Again, the motivated seller is one aspect we really like. We're actually in farmland, which I know sounds kind of unusual, but we got really worried during COVID about the amount of stimulus going into the economy. And we studied other stagflationary times. We studied, high inflation times. And the things that often jump out to people are energy, particularly you look at the 70s. But one asset class that doesn't always hit people's radar screen is farmland. But farmland, they're not making more of it. And people have to buy food, right? And so there's pricing power. There's global markets now for food, and American farmers can do pretty well. I would say that, our farmland investments have done what we wanted them to, but the fears didn't exactly materialize. But it was a good hedge for what we were trying to do. And so I guess I could pivot now. Do you want me to
Yeah, no, that's perfect. So you're investing broadly. You're using the family office vehicle for unique access to opportunities. You're a wonderful case of what I think of as somebody who just all the time ends up zigging while others zag. And, nobody bats 100, but I think your batting average is pretty high. And so I don't know if you can tie that to customer perspective, but, we've talked in the past about you're watching customers, you're running a business day to day, and then partly from those experiences and observations, you're saying, all right, here's an opportunity to go the other way that could be advantageous.
So I'm actually glad you used that phrase, because one of my colleagues here at scrapbook.com, she said, if I could summarize everything in this book, it was we zig while others zag. They used that phrase. I said, I think that's right. We're not contrarian for being a contrarian's sake, but it just tends to be the case that when everybody's crowding on one side of a boat, either it collapses or they're all watching the same whale. And we're kind of trying to look at the view on the other side. And also trying not to capsize with the thing. So while I feel there's great value in having herds go somewhere, only if you've gotten there first, right?
Right.
I don't want to overstate our ability to see the future from where we sit, but we do tend to see tremors there's a very steady pattern that we can observe in our data over time when our customer is feeling good. And, very identifiable signals in the data. And then occasionally we've learned over time when to be aware and when to ignore. And so I'll give you an example. Like we this is actually a calendar reminder that goes out to all of us in early May. May will be soft. Don't panic. All of the numbers will go haywire. And the reason is our customer is usually a mother or grandmother. And what happens in May? You've got a huge transition. You've got kids coming home from school. You've got graduations. You've got schedules that are needing to adjust. And we just know the data's going to look weird. Don't worry about it. Let's just say, if your conversion rate is going to go down, or your traffic levels more likely are going to go down. It's not so much your conversion, but people are just visiting your site less. Then you're going to have to boost your conversion rate if you want to maintain, your revenue. So we know, don't freak out if you see traffic drops, stuff like that.
Right.
But when you don't expect to see it, right, you start having to ask questions like, is there a reasonable explanation for this? Maybe, this won't be surprising to any other retailer, or at least online retailer who has our customer base. Around elections, you see a lot of weird behavior. People start paying attention to giving their attention currency to things they didn't before. And in their mind, it's like, I'm watching the news for a half hour more. Right. But if you had 2 hours of discretionary time a day and you were giving an hour of that to your crafting, and now you're giving 30 minutes of that time, you've cut your crafting in half. We're going to really feel that.
Yes.
And so it's things like that. Now, we will watch purchasing behavior, and it's not rocket science, but people become more price sensitive. We're seeing people hit the clearance rack more frequently. We are getting more phone calls to customer service about coupon requests, or when will your next free shipping promotion be? And so we're pretty dialed into all of these signals. Our customer tends to be a good bellwether for the economy. It's upper middle class with discretionary money and time, right? So when that person starts to get a little bit more price sensitive, something's happening. Maybe their spouse has said, we had an unexpected layoff in this other department. That's showing up in our behavioral patterns. And I think we've been a little bit lucky that been a bit of a canary in the coal mine during the great financial crisis. When I was watching the news and everybody was saying the economy was fine, I was talking to people in our industry, suppliers, they're a little later in the information chain because, we're buying from them and then we're turning around and selling, and then we're getting the information from the customer. And so, we're saying, hey, don't watch the news. It's softer out here than you think. You guys might want to batten down the hatches just a little bit. And so I feel like that's sort of a competitive advantage on the investment side, because again, that's one of those signals that says,
right,
we've had relationships with these, distressed funds, which ones are raising, which ones, are taking to investors, or have a fund that is open. And then, it tends to be, the trough of disillusionment too. Just when an asset class's time has come is when a lot of people are throwing in the towel on it, right?
Right. Yes.
So,
yes. Yeah. I love that. And it's so logical if you zoom out a little bit and just look at everyone's, ultimately, look at an investment in, whatever instrument or business. That business has customers. Those customers have behavior. One way to look at, say, the evolution of a business is its customers on an adoption curve of whatever the business is up to. And so when you are daily observing, in aggregate millions of customer behaviors, and that is your business, and then you turn around and say, well, over here, I'm going to be investing in businesses or other instruments, it very logically hangs together. One of the things we've talked about in the past is how you manage the thousands of SKUs that you have in your warehouse. And the idea of you let things rise to the top, you cut things that don't work. One of my many lines that I think of you, and I think of it as this idea of strategy is just doing more of what works and less of what doesn't. And there's a very logical correlation with in investing with portfolio management, which in some ways is the same thing. Power laws emerge out of investments, and some people like to, cut the flowers and water the weeds. Others recognize that actually the winners are what you're there for. So can you talk a little bit, maybe take us through what you've learned with managing tens of thousands of SKUs, and then maybe we can see what wisdom we can glean in portfolio management from the same thing.
Okay. And feel free to jump in if there's anything I say, John, that you identify a connection. Before I kind of jump in here, I was trying to figure out what was the first thing I read that John Candido published that led to the relationship we have today. And I think you introduced in the beginning, we're an LP in the Phronesis Fund, and actually what you were doing fit a thesis that we had really well, and that thesis has played out and it's worked out very well. But how did we end up there in the first place? It was the way you thought and the insights you were having. Why don't we try and do this ourselves? Because I have weaknesses and others have strengths. And so that's another thing you learn when you're operating a business. Like you only keep the things you are really good at, and you let go of everything you are not good at to someone who is better, at it than you, to the point where everybody in every job here, and I'm not exaggerating, in their job can do it better than I can. Mm-hmm. And that's when you're succeeding. And so, we're hoping that every manager that we work with is able to do it far better than we could, and that's by and large the case. And so, mm-hmm. Let's sort of tie that in. A lot of the work that you've done, John, on power laws is something we've observed with our customers, with our business. I mean, it's a feature of reality. And so let's speak to that in terms of inventory. We carry, tens of thousands of SKUs, but by and large, most of them they don't matter in the sense that they're not material to the outcome, but we don't know which ones they are. Mm. So I think you could equate that we sort of have an indexed approach mm-hmm. to our industry. It's sort of like buy everything and then double down mm-hmm. on everything the customer likes. We have our own guesses as to what they're going to like. We have educated guesses. We have a lot of history. We have databases, but we're even being surprised, mm-hmm. right? Continually. So I think one of the great lessons of this is you don't get emotional about your inventory. Mm. At least,
just like you don't get married to investments.
You don't.
Right.
The ones that treat you well, you will come to be emotional about, and you will appreciate them, and you will love them. You will become Buffett with Geico, mm-hmm. right? Mm-hmm. You'll spend 60 years or 80 years with this company. We've got products that we've been selling for, over a decade, if not 2 decades. We've been around a quarter of a century now, and you will kind of fall in love with them. But the vast majority of the stuff you're looking at, you're just not getting emotional about it. It either performs or it doesn't, right? And there are signals of performance. There are things you can identify early on, but at the end of the day, it's going to have to perform. So you get very emotionless about cutting something that's not performing. And I think, that trains you over time to just say, in fact, I think I have this written on my wall over here, that is something about long-term emotionless investing, right? The emotionless it doesn't mean you don't incorporate emotion into your decision. It just means at the time of the decision, you've gotten past that.
Right.
You've incorporated the data that gave you. Mm-hmm. And so we do have a Pareto law with our inventory. It's just uncanny. I mean, you just put this thing on a distribution. It's amazing. Mm-hmm. With our customers, it's honestly insane, this power law. We have people that have spent sums of money I find almost unfathomable with us, and they equal the output of I don't know how many, but it's it vastly it's 100 to 1 or whatever.
Crazy. Yeah.
It's and so you see these power laws everywhere, and that by and large, as you say, John, you like to say, we're hoping to catch a power law and ride it for a long time. Mm-hmm. I think that success in life often comes down to recognizing when you've caught one. Right. And recognizing when you haven't, and being willing to let go, be humble, recognize when you've made a mistake, and just move on and don't lose sleep.
So in that sense, and I find this fascinating, again, kind of picking a little bit on the temptation for businesses to plan everything versus let a business emerge, or kind of machine versus living thing. I imagine your view of inventory is you don't actually know. I mean, you have some idea and reasonable guesses, but you don't actually know what your inventory is going to be in 2 or 3 years. you have good guesses based on what's been in the past, but you expect evolution. You expect to trim the things that aren't working. You expect to be surprised by some of the things that rocket their way up to the bestseller list. And that's just the nature of a living thing.
Yes, precisely. Yeah, it is. Yeah, we're very, very nimble in that sense. The data doesn't lie. We don't have to understand it. We have to try to understand it. But if the customers are saying this is what they want, you can't argue with their behavior. And so I think it's just very important. It's very important to look at the behavior. It's not at what people say. Not to pivot too far afield, but I think it's honestly very important to listen to everything that's said, but not act on any of it until you're sure it's signal. You get some very noisy people sometimes, and one person yelling is not signal.
Right.
So.
Right. Can you tell us, I'm sure there are probably some great stories there. I'm thinking of my time as a business builder a number of years ago. And one of the observations I had was to the power law point, our largest customers paid most of the bills, but our loudest customers took most of our time. And they weren't always the same customers. and which is always, you want to please everyone, but sometimes you have to say, that this very loud customer is not in a position to run our business. So I imagine you have some fascinating stories along. Can you share anything?
Well, I'll tell you, the first thing that came to mind is it holds doubly true for your employees or your colleagues. We're very collegial around here, so we call them colleagues. We have very few problems with our colleagues anymore because we learned how to hire the right way. But I would say early on, that relationship held very true with the workforce. Your best performers were often the ones that you neglected because they did not need a lot of you. And
Right.
You were spending an inordinate amount of time trying to get your worst performers to perform well, or you were dealing with their complaints, or you were dealing with their mistakes. And so it becomes this very dangerous situation for a business owner to realize you've been neglecting the very people you should pay the most attention to, and you've been giving the most attention to the very people you should be cutting ties with, right? You should be firing certain customers. You should be firing certain people. You should be, right? And so to your point with certain customers, we call it the free shipping complainer. It's the person, who will never buy anything unless you're running a free shipping promotion or you're giving shipping away. We're like, that's not our customer. That's not our core customer.
Right.
The smart customer with us is, deep discounting, deep pricing, but the shipping game's not one we've ever wanted to play. We've wanted to play on other territory. So we've just said, hey, somebody for whom every day, free shipping is important is not our customer. We found whose ours is. So, a particular story about that, I don't know if one immediately comes to mind, but you never want to fire a customer. You just want them to understand over time you're not for them.
Right.
Yeah.
Yes. Yeah, absolutely. And that's one, one frame on selling is just being incredibly clear on what you are and what you're not.
Mm-hmm.
Success in that is attracting the right people and repelling the right people.
Yeah. I mean, the three things we always talk about internally, like, how do we know we're for somebody? It's like, you want the best selection in papercrafting. Like, that is what we do. We have everything, but we've also curated the right things for you. We spend an inordinate amount of time on curation. We are providing an inspiring shopping experience. It's what I talked about. You're seeing other people who have used the thing. We've got all the information you could ever dream of needing to make an informed decision about this purchase. And you know exactly what you're going to do when you get it. And finally, we bring in a tremendous amount of care to the experience, but part of that is the speed with which you get your stuff. We're fast to market. We're fast to door. We know that you want to get going on this project you have. So if those three things are important to somebody, they're not going anywhere else, right? Because we are built for them, and we've been building for them for a quarter of a century. So to your point, right, it's understanding your competitive advantage in the context of a particular customer and then strengthening that relationship. Yeah.
Right. And then how do you port some of that stuff, whether it's the management of SKUs and the emergence of performance or something else? How do you port some of that over to how you manage your portfolio through the family office. I mean, I love how just practically in my mind, the connections are there, but can you just break it out for us a little bit? How do you port over some of that thinking?
So one thing I like is the way we analyze independent sponsorship of a deal. Like independent sponsors will approach us with an investment opportunity for, just call it a particular business, right? We've evolved a series of 4 criteria that will determine whether or not we make an investment. And maybe this isn't a perfect one-to-one, but it's the first thing that came to mind when you asked this question. So the filter is, firstly, is this a manager with a proven track record? And so that means we're going to miss some stuff. There's obviously going to be a very intelligent person come along, and they're going to do incredible things without track record. But for us, we just need to see that. Mm-hmm. And it's a relevant track record in what they're going to be trying to do again, or what they're currently doing. There is some skill that is translatable for sure, but we want to know is their competence in this field. The second thing is the skin in the game. Like, are they going to hurt more than we'll hurt if this thing goes astray? Like, if this is a situation of heads they win, tails we lose, that's not going to work. The thing you really love to see is the majority of their net worth going to be put at risk in whatever they're doing, or at least a healthy amount, right? Mm-hmm. So this skin in the game question, will we lose together? And what will be the proportion of pain? We're okay if things go south for the right reasons. And a lot of things will go south for reasons that are totally out of our control. And we might be able to get into a story on that later, but where a perfect storm happens and yet you're proud of it is maybe, one of your greatest moments, and you wouldn't change your decision making. You just know black swans happen.
Right.
So that's the second thing. The most important thing, though, that we look at is what we call the sleep at night test.
Yes.
Right. There's 2 very important things we need to talk about the sleep at night test. So this question is, if this business were a nonprofit, it particularly works if it's a business, would we be willing to donate funds to advance knowledge in this field? In the startup world, it's very likely that it's power laws on steroids there. So you're probably making a donation, unless you have some inside reason to believe it's more safe than it is. But usually we're on the outside looking in. So we're looking for ways to minimize risk. And the way you sort of can live with a zero, if you're thinking about what are all the ways I can live with a zero, I can live with a zero if I know that we've advanced the world's knowledge in an important area. That could be one. That could be one way. There's startups that we've gone into where we're like, if this works out, this is going to pay off tremendously. But you're doing expected values. It's not even 1 in 100. It's 1 in 1,000. However, they're working on a really hard problem for humanity, and even if it's a zero, they're going to move it. They're going to move the ball down the field. We could live with that. We haven't risked a sum that we're out of the game. We can sleep at night knowing that if it's a zero, we're okay with it. And the amount we've invested, we live to fight another day. I actually have a quote on my wall from you. I've read this to you before. You said at one time to me, investing boils down to pursue power law outcomes in a way where you never get taken out of the game of pursuing power law outcomes, right? Mm-hmm. So, yeah, that's essentially the criteria. So when you find a set of principles and then you hew to them, I mean, that's the best thing I could think of to answer your question about, what are these, on the business side, what are these 3 unique things you do? But what are these, sort of 4 unique things you do when you're trying to identify, evaluate a venture company?
Yeah. I think we're both big fans of the sleeping well at night test. I think we both agree that the body carries a lot of information, much of which we try to put into words, but some of which is very difficult or impossible to put into words. And so if something's causing you not to sleep, that you should probably pay attention to it. I think there's a lot of wisdom in that.
Yeah, you usually find out later what it was, but you learn to trust, your mind, your soul, your spirit, whatever you want to attribute it to. You're getting signal, and you need to trust that and start looking around for the reason why. I mean, we've said no to deals where we knew they were a home run, but we didn't want the world to evolve in that way.
Yeah.
We wouldn't be able to sleep. It's just like,
Yes. I just talked to an investor who got in. I'll leave names out of it for obvious reasons, but they invested in a company which was a complete home run, but the company failed at what they invested in, but pivoted to a market that, if I said what it was, I think it'd be easy to agree is not a market we want the world to have so much of. Mm-hmm. And it was, one of the things I respect about this person is he was really angry about that. He's sitting there, he made a great deal of money on it, and was just, this is not how we want to make money.
We've got one of those right now, and I'm embarrassed to even say we're in it or what it does. At the time we started it, it set out with a very noble objective.
Yes.
And we have to decide what we're going to do, because this is likely going to have a successful exit.
Right.
And I think we're probably going to donate it to an organization that's combating what this does, and just make them fight against themselves. But there's such a thing as blood money, and you don't, I don't know, you can't sleep at night. Right?
Yeah, absolutely. Yeah. Absolutely. An area which dovetails with all of this is, I know you have spent an inordinate amount of time cultivating, building, thinking about capital Q quality. I think you suggested earlier in the pod, for the next edition of your book, it will be The Art of Quality Work. And I know that you and I have both read Beinhocker's The Origin of Wealth, and, a motif of this pod is, myself and my co-hosts tried for several years to define capital Q quality, and we learned that it's a thing that almost escapes definition. You almost have to experience it through story and other things to come to understand it. But can we riff a little bit on, as you've thought about Beinhocker and others, what have you come to learn, or dare I say even try to define, when you're thinking about quality, and how you then can weave it into all the other things that we've been talking about?
Sure. I have to give the Art of Quality pod a lot of credit for this, and you a lot of credit for this. This is something that I started thinking a lot more about in our discussions, and you and your team spent a lot of time thinking about, firstly, let's point to a thing and say, this is quality, and let's make a list of these things, and then let's see, what we can abstract from it. And then ultimately you guys kind of said, it's ineffable, but you know it when you see it, right? And you, or maybe more particularly, you know it when you experience it. I started thinking about my experiences with quality, and I'll tie this into Beinhocker momentarily, but when I was courting my now wife, she took issue with my clothing purchases, not because of the appearance, but because of the quality. And she worked in the fashion industry in New York, and she just said, one thing people do not understand who are buying clothes is that they spend way too much money on clothing because they chase style instead of chasing that which is timeless. And when you chase style, you inevitably will get lower quality, because the people that make clothing to fit styles know nobody's going to be wearing it in a year. So it's just garbage, and it's gonna tear, it's gonna fade, it won't wash, it won't clean. And so for the very first gift she ever gave me was a pair of pants. It was pleatless gray wool pants, this beautiful textured fabric. She said, this is one of the most inexpensive purchases you'll ever have, because you'll be wearing these 10 years from now.
Yes.
And she changed my thinking, like, completely about clothing, right? And really about anything. It was about, wait, what's timeless in the world? That's what I want to surround myself with. And it's actually going to free up dollars for other things. So as you've probably experienced, when you start a pursuit of quality, you have much lower turnover. Paradoxically, you're spending a lot less time researching your next idea.
Yes.
Right?
Yes. It's high economy of money and high economy of time.
Yes.
Yeah.
And there's been a lot of valuable things written by you about that. And so quality will yield economy of money, economy of time. But when you start looking at it from, the fabric pattern of reality. This is where I think Beinhocker really helps us. So at the risk of getting a little too pedantic here, but I think it's helpful. In his book, The Origin of Wealth, he says, and wealth and quality are related in important ways. All wealth is created by thermodynamically irreversible, entropy-lowering processes. So, wealth and quality are intertwined. And so I think where they are intertwined is this idea of lowered entropy, right? And for those who aren't as nerdy as maybe we are, entropy is a measure of disorder, right? And high entropy things move into disorder more quickly. And so just to, make it really crudely, a poorly made shirt is going to move into disorder and be unusable more quickly than a lower entropy shirt from a lower entropy material is going to. So economy of time, right? It's going to last longer. So if you start to think about quality in these terms, you start to say, yeah, everything that's quality in my life is something that lasted a long time. It was something I dropped and didn't break. It was robust. Maybe it was anti-fragile, but it is the entropy itself. And it's not just entropy for its own sake. It is entropy in service of usefulness, right? Or an order. So he says, right, let me just read a couple passages because I think it's helpful. He says, on the supply side, things with low entropy have value. By definition, things with low entropy are scarce and require energy, materials, and information for their creation. So economic wealth and biological wealth, he says, are thermodynamically the same sort of phenomena, and not just metaphorically. Both are systems of locally low entropy. So he talks about these are forms of order, and there's a fitness function to this order. And so his argument becomes, if wealth is indeed fit order, then we can use another more familiar word to describe it. In physics, order is the same thing as information, and thus we can think of wealth as fit information. And in other words, knowledge, the origin of wealth is knowledge. So, you can take a jumping off point there. For me, a pretty useful definition of quality, if it's ineffable, but I try to name it, my rendering is we call something quality when it is both fitly ordered and lower entropy than its alternatives, right? It's always relative to something else. There is a world in which my iPhone is low quality. It's just not the one I live in.
Right.
Yet, right?
Yeah. I love that. I love the way that you've sort of inverted this from let's try to explicitly name quality to let's call it something as compared to something else. And then from there, we did have, I might have shared it with you. It's kind of gone around the internet a little bit, but at one point, the Art of Quality team and I kind of created this list of products. This is another way we were poking at it. It's just what is, all of us play instruments and some like what are instruments that we think are high quality? What's clothing? What's cookware? Well, it went everywhere. But what you just shared there does sort of sum up a lot of it. We talk about these guitars last for generations and others don't. And this dish, if you drop it, it doesn't break, but most do. And it always became this sort of, I don't want to say banal, but like just very practical. These pants, I've had the same experience. I've got a pair of gray trousers. I've had them for 10 years. They still look like new. It's, I've not had to buy more, and whatever they cost, I've worn them so many times, it doesn't matter by this point. Yeah, that's well put.
Yeah, my dad still plays a 1960s Martin guitar, right?
I love it. Yes.
I'm playing a mid-90s Taylor that sounds better every year, right?
Yes.
That's another thing that, like, if the experience something provides improves as it ages,
yes,
right, that may be
then it's really special.
A good investment.
Yes,
a quality investment will do that, right?
Yes, yeah, that gets to the scarcity point too. By definition, improvement with age means you can't fake the age, right? Martins from the '60s have gone up in value because you can't go back to the '60s and make more. But time is that essential component to quality.
Yes.
Yeah, man. Well, there's so much we could cover, and I think we're gonna have to do this again sometime if you'll allow us. But I did want to, as we think about closing here, there are many things we haven't gotten to. I'd encourage listeners to look up cinematic pop on YouTube or on Spotify. It's a whole nother beautiful world of music that Drex and some of his family and friends have been in. But I kind of want to say, what is your next frontier? I mean, in some ways you've run the table, on the endless game that is family office and asset allocation. You've also run the table on the endless game that is building a wonderful, high quality business. But I know, every time I talk to you, I learn about something else you've either learned about or you're working on. So what's the current or next frontier these days?
Well, true to our point of departure, I don't know the answer to that. I'm looking to see where that evolves. I don't know for sure, but I think I'll be sitting in this seat for quite some time, trying to develop people. I have a real satisfaction encouraging others, right, to become the best versions of themselves. And I feel like where I sit, I have an opportunity to do that in the setting I most enjoy, which is a one-on-one setting. And inside, a company is very unique in the sense that you can experiment with things. And if they go awry, nothing bad really happens.
Right.
But I would say that, my spiritual life is very, very important to me. And I do think that most societal problems go a layer deeper than what most governments are focusing on. I think we've got more of a spiritual crisis than anything underneath our unhappiness problems. Certainly we have policy problems that are driving deaths of despair and things like that. I don't discount that. But I also think where we have better spiritual foundations, we're more resilient to deal with. You study, I'll answer your question, but when you study meaningful contributions through history, it tends to be people who help others be resilient in the hardest times. And I had the blessing and privilege of being a missionary for 2 years when I was young and unmarried, and it was formative. I think about that experience every day. I think it's the most important experience that I've had in my life to open my eyes to what's important and what matters. And so maybe it's a hunger to relive that, but I'd like to identify, mission-related opportunities in the future in a way that I hope yields value. I think there's probably a way to marry education and religion in such a way. My own church does a lot in these fields and in these respects. And if there were an opportunity to get involved at some point, I think I would. My wife and I have talked about it, and we still have children at home. I have 3 adult children. I have 2 still at home, but we'll be empty nesters soon enough, and we'll hopefully identify something on that frontier that will be meaningful. I think we would both find deep spiritual satisfaction doing that. The material is very important because the material is spiritual. A religious leader in my own faith said it's very hard to teach someone the gospel of Jesus Christ when they have an empty stomach, right? Or they have, ignorance and can't provide for themselves. So I see it all as being intertwined, but I hope that's an avenue that evolves over time. And other than that, I hope to be a grandpa someday, but
sure,
I don't want to hurry the kids along, but they don't seem to be in a hurry.
Yeah, somewhere that we'll have to jam another time. You and I both hold dear the idea of living with a set of values and why purpose matters, why service matters. The idea that, in investing is not just about dollars, that building businesses is not just about return on capital. And so I'd love to go down that whole rabbit hole sometime, but I might save that for another time. We do always ask, and we ask this in an intentionally broad question, what kind of help are you looking for, and how can people find you if they could be helpful or wanted to connect with you?
Yeah, John, I've been thinking about this question. First of all, where to find me, you can just email me, drex@scrapbook.com, DREX. I get surprisingly little outside email there. So if you want to be one of the first, I'd welcome hearing from you, particularly the type of listeners. I've had the great fortune of getting to network with some of your other guests, and they're exactly the kind of people I want in my life. So that would be wonderful. This might be a little bit interesting, but the help I'm looking for is others who can give me the satisfaction of putting my knowledge to work. So if you've got a business problem that you're working on, particularly one where there might be an opportunity to invest in you. And then, maybe, I've got a missing piece of knowledge you need, investment plus advisory. I've been reflecting on the fact that, and maybe I just mentioned that, I would like to do more to leverage what I know to help others. I do advise a handful of businesses currently that I just liked the operators and they had particular problems they were working on. And I'm not a paid advisor, and there may be a natural investment evolve, but it's mostly just a good fit with what I do and is giving, me, honestly, me the satisfaction of doing for another what was done for me. I've had a lot of mentors who have just, kindly helped me through a problem, and I see the value for that, and I don't think I do enough of that. So, if there's somebody there who's listening who has an issue, you do me a favor by reaching out.
Yeah, absolutely. Yeah, I'll personally attest to Drex and I are both advisors to a firm that we're both investors in, and I think it's fair to say we have a lot of fun doing it. So
I think that's very fair.
That's, at some point, how you spend time is the stuff life is made of. And so, if you can make the right connection between capital and help and building and so forth with wonderful people, it's a real blessing.
Amen.
We asked, as you know, we asked the same closing question of all our guests, which is, what is the most memorable encounter you've had with capital Q quality?
Well, this will be a little bit of an unconventional answer, but it's the most honest answer I can give you. Is I've thought about quality, and I've thought about the intersection between low entropy. The most memorable encounter in capital Q quality for me is when I became aware of the fact that I believed in the Christian message and I got a hope in the resurrection. I believe the highest quality in terms of entropy is a being that is so low entropy there is literally no entropy. So eternal life, right? The most memorable encounter is that what informs everything and gives it satisfaction to me is this idea that, yes, scarcity gives things their value, and yes, I am mortal, but the idea that there is an enjoyment that extends particularly with the relationships that are most important to me, that moment when I guess I would call it a conversion is the most memorable encounter with capital Q quality for me. If I believe that quality is real and there's a source of that reality, then encountering what I believe in is that source has to be the most important for me.
That's a beautiful answer. Well, thank you for all you've shared with us. That, as I knew it would, that went all over the place, from the very deep to the very practical and everything. And so I thank you for your honesty. Thank you for the wisdom you've shared. Thank you for coming on the program. This was fun. I look forward to others, encountering it, and let's leave it there. But thank you again.
John, thanks so much. I appreciate you.
Absolutely. Likewise.
Okay.
Thank you for listening. For more resources, please visit our website, theartofquality.co. If you know someone who would be a good fit for this format, please reach out.